Hello and welcome back to Green Money Momentum. I'm your host, Trevor, and we are here for Friday's daily talk of stock. It also happens to be the first day of the month. So today is August 1st, and as we could see by the heat map here on screen, August is starting out pretty bloody. A lot of red in the markets, just like it has been red all week long. And so before I get into all the market data, the news, everything like that, I just want to first apologize to all my supporters and everybody who comments on my videos, everyone who's with me for all my daily talk of stocks and all my market analysis, everything like that. This has been a super rough week for me. If you guys caught my last video, which was on Tuesday, I talked about how sick I am. This week has been crazy. I have just been super sick. My body has been eviscerated. I have dropped a lot of weight and I have dropped a lot of equity with the markets this week with how red it is. But I'm not too fearful about the markets, and I don't want to put anyone in concern either. I am starting to feel a bit better, and I'm hoping that this weekend I'll be able to do my top 3 stocks for the month of August and get back on camera. So if you're new here, I always like to show up on camera, nice suit and tie, and make a great little presentation. But things have been rough this week, just as they have been rough for the markets. And what really sent the markets red this week, they did start off red on Monday and Tuesday, but on Wednesday, the peak fear, uncertainty, and doubt really started to step into the markets because Jerome Powell, the head of the Federal Reserve, came out. This is the FOMC meeting, which was on Wednesday, and the Fed decided to keep the rates steady. So the markets were kind of already anticipating that the rates were going to stay steady, but what was not positive about this is Jerome Powell also said, "We have made no decisions about September and have time to take in a wide range of data before the central bank next meets," he said. And so with that sent a spark of fear into the markets, because we know this year a big narrative has been whether the Fed will cut or not. Last year in December, they said that we were going to go from 4 rate cuts this year to just 2. And it has been a very frustrating year for investors that want to see this rate cut, because it seems with every single meeting, Jerome Powell says that the rate cut will not come. And so with that, when we look at the major indexes, both of those have fallen off quite a bit, along with a lot of stocks. Cryptocurrency has also been falling down. So the markets in general have been bleeding. But myself, I am not too concerned about this. And I actually see this as buying opportunity, because I do believe that the Fed will still cut later this year. And even if they don't, the markets have actually reacted pretty positively to the high interest rate that we have had throughout the year. Well, high relatively speaking, I guess it depends on where you're coming from, because if you look at the all-time history on rate cuts, they were a lot higher 20, 30 years ago. But in the current date and time, we know the markets are heavily dependent on the Federal Reserve and what they do. And so the markets have been anticipating this rate cut, which has not yet come. But I am excited because this has only brought the markets down a little bit more for buying opportunities. When we look at the major indexes, we could see both of the major indexes. We have the SPY on the left, the triple Qs on the right. Both have bucked off of the positive trend that they were on, but by no means do I think that the markets are going to just go back down to the lows earlier in the year. There's a lot more positivity now when it comes to inflation. We know inflation has been being reported pretty decently. We know with the tariffs, there was a lot of concern about those. But as Trump and as statistics show, the tariffs have actually not been too much of a negative to the economy, actually bringing in a bunch of revenue. And with tariff talks, there has been a lot of countries that have also now made deals with the United States. So some pretty positive news around the tariffs. Earlier this year, the 3-headed dragon of fear, uncertainty, and doubt was tariffs. tariffs, inflation, and then the last one being interest rates. So at least when we talk about inflation and tariffs, those are looking decent, but interest rates, we still do want to see those come down. But just looking at the major indexes being bucked off that trend, they have also trailed down on the relative strength index, but still looking a little bit high on the MACD. So there is the possibility that we do see some more bleeding within the markets. But what I will say is the same thing I said earlier in my video on Tuesday. And guys, remember, I am a hyperbole, but even on Monday and Tuesday, I was saying the markets could be feeling some fear, uncertainty, and doubt because of what we are seeing in the markets this week. What was Wednesday with the Fed, and then today with the tariff situation. The tariff situation overall being figured out a lot, but the interest rates, again, still need to be figured out. But I personally believe that this is just a bear trap, because when we look at the markets over time, they always go up and they always recover. So during this rip up that we have seen, there's been a lot of fear, uncertainty, and doubt. And although when we look in hindsight, it may feel like this has been a straight recovery, even during this time, we did have some bleeding days in the market with some pretty big fear, uncertainty, and doubt. We had Moody's downgrade the United States. We know earlier in the year, everyone was so worried about the tariffs. And then just along the way, there has been some fear within the markets, but the markets overall have been shaking off the fear. So I do believe there will be a recovery. I do believe that if you have extra capital, now is still a good time to invest into the markets. Again, we may see a little bit more bleeding, but this is why, as an investor, it's always important to keep yourself in a position where you could allocate some free cash into the markets to take advantage of these buying opportunities. In general, a lot of the stocks that we talk about have also been falling off, but just like the major indexes, they are looking a bit more balanced and down to earth on the relative strength index and on the MACD. So again, guys, I am feeling super ill. I do plan on getting back on camera here very soon, but I just want to say thank you to everybody who gave me support through the comments sections, everybody who has been nice, everyone who has wished me well. Again, guys, just because the markets have gone bearish this week doesn't mean by any means that I meant to abandon investors. So thank you guys. As always, we will get back to the regular schedule and doing our daily talk of stock every day very soon. And I believe that the markets will get back on track also. So things could be a little bit rough in August, but again, I do believe that we are in a bear trap, and the markets in general this year have been dealing with this rate not being cut all year long. So I do believe that the markets will adjust to this. I believe this was just a little bit of a dip, a selling opportunity for those who want to make profit, buying opportunities for those who are looking to spend a little bit extra capital and put it into the markets. August may be rough, September may be rough, but in general, the markets will recover as they always do. Thank you guys so much for being here for another daily talk of stock. I hope everybody is doing well out there. I will see you in the next video. Have a great day.